Welcome back to the channel, my fellow traders and investors. So this week in the markets, it's about to be absolutely crazy. It's super hectic with a lot of events, news, earnings, releases all coming out that could potentially change the way the market trades, for the next few weeks or even the next few months. It's going to be crucially important to be paying attention to what goes on. So in today's video, I'll be breaking down a fundamental overview of the events and some key insights to be aware of going into this week. Along with that, a key technical analysis breakdown to let you guys know the key levels to be watching out for and how I personally plan to be trading the markets this week. So without further ado, let's jump into the video and make sure you've subscribed if you haven't already. Alright, so one of the first major pieces of news coming out this week is the June Consumer Price Index coming out this Wednesday. Now this is absolutely critical because this is going to tell us about how prices have been impacting consumers and how much inflation we've really been experiencing. So currently the market is expecting headline CPI to grow 8.8% year over year and core CPI to grow 5.8% year over year. So pretty huge numbers. Now headline CPI, core CPI, what's the difference? I'm sure you guys have been reading all about this, but basically core CPI is headline CPI, subtracting the energy and food prices and the growth within those areas. Because energy and food are areas the Fed can't really control right now, and that's why they've also been focusing on core CPI. Because right now, if we really think about it, what can the Fed really change? They can't do energy, they can't change food prices. What they can really affect is overall consumer demand. And these are in areas like investments, where we look at mortgages. Mortgages are decreasing. They're trying to get people to buy less so that house prices, investments, the overall values can decrease and bring down those prices in those areas. Then overall goods, and as well as areas like even the dollar, right? By increasing interest rates, what the Fed is essentially doing is that they're bringing in foreign investment and foreign money into things like government bonds that are seeing higher yields, and as a result that strengthens the dollar and makes it easier and cheaper to import things, right? So that overall is what the Fed is really trying to accomplish with these interest rate hikes. Now, one thing I want to mention about inflation is that a lot of people are focusing on inflation itself, but the problem is not inflation, but the cost of bringing down inflation to the 2% mark that the Fed wants. Because if you think about it, the Fed would choose low inflation and higher rates and a potential recession any day over continuous inflation that's hurting the economy, or consumers, in the sense that prices are very high. So that's the trade-off that you have to think about. It's not really the problem of inflation, but the cost of inflation and how deep the Fed is willing to go. Already, the market is estimating another 75 basis point hike upcoming, and we could see the federal funds rate hit 3 to 4%, with some people estimating even 5%. That's probably extreme and way out of the range of what the Fed would even do. But the key point to focus on is what is the cost of the Fed bringing down inflation and how far would they be willing to go. Now, another thing not mentioned on this is the Producer Price Index report also coming out on July 14th, 2022. Another reason this is a massive report is because the PPI Producer Price Index really gives you an insight into how inflation and how price increases have really been impacting producers. Because at the end of the day, the costs that producers face end up being passed on to consumers. So if we can get a good insight into that, that also might allow us to better understand how producers are being impacted and what the forecast could look for them going forward, especially with these supply chain bottlenecks that the global economy has been facing. Now, finally, another key fundamental thing to be watching out for are bank earnings, especially JP Morgan Chase on Thursday. There's no better bank to really get an understanding of the American consumers and how well they're doing than a bank like JP Morgan and Citigroup and Wells Fargo. these banks, when they report, it's key to understand their view on how mortgages are looking, how, overall consumer strength is, right? Are they seeing people beginning to default, or, is consumer strength still strong? This is going to be a big sign as, overall consumer confidence and how the economy could be shaping up with these current rate hikes coming in, and how the overall strength of the economy is to weather the storm or potential recession that could happen. Now, one thing I do want to touch on is a lot of people are saying we're going to have a recession, and sure we could, but I personally don't believe it's going to be anything major. If we, just look back to these past couple of years, they've been pretty prosperous for a lot of people, with consumers seeing very high strength and pretty big savings during this time. And so I definitely do believe that if we did have a recession, it wouldn't impact these economies too much, in the sense that consumers are pretty strong than compared to, say, a 2008. So that's my perspective as of this point. So those are the key events, earnings, and news to be watching out for this upcoming week. And hopefully those insights that I provided can help you better understand, what is the point of all of this, and what it really means for you, what it means for the economy, and what it means for the market going forward. Now that you get a good understanding of that, let's jump into the technicals of the market, how things are looking, how stocks are performing, and the key levels to be watching out for, along with my personal strategy to be trading. And if you haven't already, be sure to subscribe, and also go get my book, A Technical Trader's Handbook, on Amazon, which was the #1 hot release in public finance. So be sure to go get it right now. Alright, so jumping into the technicals, it definitely seems like the market is setting up for a major move, potentially higher or lower. And I know saying that makes it seem like, well, obviously the market either goes up or it either goes down. But no, literally, as we take a look, you'll see that the stock market has really been accumulating to a point where that's why this week is super important, because based on the news that comes out this week, the earnings and the forecast, it could potentially dictate a major move lower or major move higher, as you'll see in just a little bit. So as we can take a look, the SPY, which basically tracks the S&P 500 on the 1 month hourly chart, you can see we've been trying to make some moves higher. We've been forming higher highs and higher lows, which overall is, decently strong trend. If we take a look right now, it almost looks like we're turning this previous level of resistance here at about 382.5 into support, which is a nice strong thing to see, as well as, this kind of bottom diagonal support line. And, on a move higher, we could potentially see a push up to this top diagonal resistance line here at 395. But going to the 6-month daily chart, a few more things we can see is, first of all, it looks like almost like we're forming a cup and handle, right? We came down, we're forming this cup, now we're forming our handle before the eventual move higher. Now, one key bullish thing to keep in mind is that you can see how we had this previous level of support here at 382.5 right over here. Well, look, we broke below it, we turned it into resistance, but now we're starting to reclaim that previous level of support. So if indeed, this week we do get numbers out, and let's say inflation is lower than expected, our bank earnings are a little more positive side, I could expect the stock market to retain above this level and start forming higher highs from here on out. But on the other hand, if we do break below this 382.5 level, I could expect a lot of buyer stop losses to be triggered, and we could see our way down yet again. So that's a key thing to be watching out for, this 382.5 level, and how the market and S&P reacts around that level. Now, similarly, if you go to a stock like Apple, right, these Apple, these Googles, these Amazons, these are the major players in the S&P. They make up a big portion of the market, and depending on how they move, the overall market moves. Simple as that. So a key thing to be watching out on, these big stocks is, can they break above their neckline? So for Apple, that neckline happens to be at about this 148 area, right? If we can break above this resistance and reclaim it as support, then we could see those trends above, continue higher, or instead we could get rejected and get crushed back down here to about 130. And if we take a look at a stock like Amazon, we can see it's somewhat similar, but not really, right? Stocks like Amazon also kind of look like they're forming that inverse head and shoulders. But with these patterns, you can also see them the other way, right? It almost looks like we could be forming our left shoulder, our head, our right shoulder. Though we are seeing a lot of buyer strength in this area, maintaining above our bottom neckline here at about $100. So these essentially the stocks right now are trading within these ranges. If you look at the majority of these stocks, they are trading within these ranges. And what I can expect, and especially in the short term with these technical trades, is that on lower news, expect a drop down to these bottom levels. Watch if they can hold. If they refuse to hold, we could see massive selling pressure once we break this. Because if you just take a look at it, right, there's been a lot of buyer accumulation throughout these levels. Once we break below, buyer stop losses are going to go poof, and we're going to get crushed. If we break above, similar thing. Short sellers have been selling, their stop losses are going to go, and boom, we're going to see massive buying pressure to the upside. So that's why the fundamentals combined with the technicals are going to be important to be watching out for, and how the market could be shaping up in this coming week, and the coming next few weeks as well. So with that being said, guys, that's the video and some of the key insights and technicals to be watching out for along this very, very, very important week. So if you enjoyed this video, be sure to like, subscribe, and go get my book, A Technical Trader's Handbook, on Amazon if you want to take your technical analysis and trading to the next level. With that being said, I'll see you guys in the next one.